Hello everyone, Scott Hislop, President of Transworld Business Advisors of Minnesota. It's not uncommon for us as the world's largest business brokerage company to have business owners come to us 3, 4, 5 years ahead of when they're going to sell. A lot of important things that business owners can do ahead of the time that they're going to sell. And we're going to have a discussion today with Marv Soldner, one of our senior advisors at the St. Cloud office, and Sam Johnson with Johnson 229 Commercial Real Estate, about some of the things that you can do as a business owner to prepare your business ahead of the sale. Marv, what are some things that you see that are common that business owners don't always do but would sure pay big dividends if they would do?
I think the most important thing, Scott, is making sure that the books are up to date and current. Oftentimes people fall into a lapse because they run a business for a long time and some of the details of their expense categories are kind of blended together. So good records are absolutely critical.
And Sam, from a commercial real estate perspective, what are some things you see there that are common that people don't always do that would, again, pay big dividends if they would do?
Yeah, Scott, I think what's super important from a commercial real estate standpoint is if you have any desire to separate the transaction, sell the business separately from the real estate, or if you want to keep the real estate and sell the business as another source of income, it's super important that you get a good lease in place to your business itself and actually pay the lease payments to the commercial real estate. You might get to a point where the potential buyer is going to want to just purchase it all anyway, but giving yourself that option to sell the commercial real estate separately from the business is super important to give yourself flexibility and open up your buyer pool.
One of the common things that we see is very common is business owners don't want to pay an abundance of tax. And one of the common things that we do as part of our service is do a recast that shows the owner benefit of the business. At the end of the day, though, the buyers are using the tax returns as kind of the Bible for the business. And it's Marv, you'd see if they pay some tax, 3, 4 years ahead of when they're going to sell, probably is to their benefit, and buyers would view that more positively than just looking at their P&L that they would present.
Yeah, it's very true, Scott. And everybody does their approach to paying taxes as they choose. There's no judgment on our part. However, as you finance businesses, the bank is going to ask all of the income, profit and loss statements, and tax returns to match up. So whatever the tax return says is what the bank can finance on. So although there may be some other expenses or income that aren't reflected, at a certain point, the bank cannot finance it unless those are represented. So getting ahead of that 3 or 4 years is very important.
The other thing that we see quite often is before a seller decides to sell and they don't realize the length of time. So on average it takes about 9 to 14 months to sell a business. So a lot of times the sellers make that decision that you'll see, and then they take their foot off the gas and don't continue the business as far as the growth and continue to financial enhancement. Talk to us a little bit about what do you think sellers should do the last year before they sell in that regard.
Well, I think the approach that any business that's for sale should do is act as though you're going to own it for the next 10 years. Invest in your web and social media as you have, or in fact increase that. Make sure that your deferred maintenance doesn't lag, because sellers will definitely value your business if in fact things need replacing. No different than commercial real estate. If you're selling a building, if it's an aged roof and needs replacing, the buyer will take that into consideration.
And Sam, so simple things like paint, new lighting, fresh look, things that don't cost a lot are really add to the value of commercial property when they do to sell as well, correct?
Yeah, definitely. And just having any loose ends tied up that might be out there that may not even relate to the tangible structure of the building, but making sure that you have contracts in place for a lot of the items if it's very real estate specific. And then in addition, just taking care of the building itself, from paint to roof to sealing the parking lot, whatever items it may be. It's always important to keep up on that, and it's going to make a more attractive business to sell.
Perfect. So thank you, gentlemen, for being with us today. Again, just a few items to consider ahead of when you're going to sell the business. Again, we're here for you. Feel free to reach out to us, tworldminnesota.com. Any one of our team members would be glad to assist you. If you're thinking about selling your business and you're 3, 4, 5 years out, it's no worries. Go ahead and contact us, and we'll help you from a high-level perspective, show you what might enhance the value of your business.